Hey guys, I'm super excited to have you all here. I'm super excited to have you all here once again. So, for those of you joining me for the first time, my name is Lightman Chimso, and you're welcome to Light on the Chat. All right, I'm all about simplifying your forex journey. So, if you have any question concerning any forex related topic from the previous classes or from anywhere, any source, you have any forex related concern, yeah, you can ask me right here or hit me up on Instagram or Telegram, and I'll make sure I answer your question. Right. So yeah. Okay. So basically, we've been on a break, right? And today we are resuming, and we are back in business, right? We are back in business. I'm not gonna lie, I've missed all of you right here. I've missed all of you. I've missed, teaching you guys, yeah, because it actually gives me joy when I'm actually able to teach you guys and you guys are actually learning. Yeah, it gives me joy. So I'm really super excited to have you guys here again with me. So if you can hear me, drop number one in the chat box. If you can hear me and you're excited that we are starting again, drop number one in the chat box. If you can hear me, drop number one in the chat box. Drop number one in the chat box. If you can hear me, drop number one in the chat box. If you can hear me, drop number one in the chat box. Comments already on. Okay. On. Someone say we are back. Yeah, we are back. We are back in business. Okay. So today I'm not gonna be teaching you guys anything new. Just gonna be teaching you guys how to apply what I've already taught you, like what you already know. So if you've not been following up, you're new here, no problem. Live classes, they I created a playlist for you on my channel, beginners live class. You can just go and watch it accordingly so you get to catch up to where everyone is right now, catch up to our pace, right? And if you've been here right from time and you still don't know anything, I don't know what the problem is. Maybe it's you that's not serious. So today I'm gonna teach you guys what you guys already know, right? If you can hear me clearly and you can see me clearly, drop number two in the chat box. If you can hear me clearly, if you can hear me clearly and you can see me clearly, drop number two in the chat box. Drop number two. Drop number two in the chat box if you can hear me clearly and you can see me clearly. Okay, two, can hear me clearly. Okay. Are we going to get the recording of this class? Yeah, it's always saved on my channel. It's always saved on my channel. Every class, it's automatically saved. It's always saved on my channel, so you can come back and rewatch it and keep rewatching it for as long as you like until you're able to understand it, right? So if you don't get it right here, there's no problem. You can come back and rewatch it. But the essence of these live classes, you get to ask questions, right? If you're confused, you get to ask questions and I get to answer it right here. But once it's pre-recorded and you go and watch it, you cannot be able to ask me that question until the next live class, and probably you might forget. So that's the essence of this live class. You get to ask live questions and you get to give you live answers. And if you're not able to answer the question, and then we shift the question to the next live class, right? Because I don't have all the answers. I don't have all the answers. So that's the essence of this live class. So now I want you guys to do something for me. Hit the like button. If you're not yet subscribed, hit the subscribe button and turn on post notifications so you always get notified whenever we are streaming live like this, so you don't miss out, right? And also share this across all your social media platforms. Let's share this, and while you're sharing, let's wait for the numbers to come up a bit so that we can dive into the business of today. So I'm going to share mine across my social media platforms. So you guys go ahead, hit the like button and make sure you share and let them know we are live. Let your friends know, your family, whoever needs this, just share it to them. Let them know that we are live, right? So go ahead and share while we are waiting for the number to come up a bit. So we dive into the business of today, right? So you can just go ahead and share across your social media platforms, your WhatsApp status, your Facebook story, your Instagram story. Just go ahead and share, right? If you're on Telegram, share it on Telegram. Just go ahead and share, right? Share, just share, and let them know that we are live right now. Let them know we are live right now. Let them know we are live right now. Okay, so hope you guys are done sharing. Okay, okay, so okay, so let's jump into the business of today. You're not going to be waiting for anybody again. Later, they'll come on. We're not going to wait for anybody. So let's jump into the business of today. So today's class is all about applying the Chartlit strategy, right? Strategy. What is the Chartlit strategy? For those of you who don't know what it is, it's the personal strategy I use to trade and make crazy amount of money from the market. You understand? It's the strategy I use to trade, do my analysis, and it tells me where is the market going, how I get to read and understand the market. So that's what the chart strategy is all about. So I've told you guys everything that makes up the chart strategy. All I'm just going to show you today is how to structure your thinking so you get to apply it. You join everything together and you apply it. So today is going to be more of practicals. I'm going to be taking you guys to the charts immediately to show you guys what it's about. So first off, now we're going to be talking about applying this strategy, right? Now, the first thing you need to know as a trader when applying this strategy is your session timing, right? That's the first thing you need to know. Session or time. Now, for me, I trade the London session and partly of the New York because that's when I'm mostly active. And because the London session is about 8 a.m. Nigerian time, that's when it starts. And the New York session is about 1 p.m. Okay, now New York has shifted, so it's currently like 12 p.m. and 1 p.m. now Nigerian time, no longer 2 p.m. again. So that's how it is. Sometimes London do shift now, we are an hour ahead of London, or New York shifts and becomes 1 hour. Yeah, so that's just it. So the first thing you need to know is your session time. Now you have to wake up early. That's one thing. I don't know. I can't emphasize on this. You have to wake up early. Sometimes on my Telegram community, whenever I drop a signal, some people come and be like, "Oh, they missed it. Or they were not active back then." I wake up 6:30 a.m. to do my analysis. That's when I wake up. 6:30 a.m. to do my analysis, and by 6:30, 7, 8, I've dropped a signal. And people come and tell me, "Oh, they were not." I just look at them and be like, "Oh, these people, they are not really serious." Do you understand? So that's just it. You have to know your session. So if it's the London session that works for you, fine. Trade the London session. If it's the New York, I have nothing to do with the Asian session because that is not my session. So even if I see a trade setup in the Asian session, no matter how juicy or spicy it looks, I'm not gonna take it because why? That is not my session. I have nothing to do with it. Do you understand? So I only take trades that actually in my session. So if it's outside my sessions, I don't trade it. So I trade the London session. If my London session is very fine for me, then I don't have anything to do with the New York session. But if my London session is not fine for me, or I don't see any setup during the London session, Then I'll be looking at the New York session to see if I can take any trade. So that is just it. So that is the first thing you have to know, session timing. And then the next thing you do is identify your levels. Now we've talked about levels, right? In the previous class, we talked about psychological levels, um, point of hesitations, supply and demand zones, support and resistance, high and lows. So those are the levels we talked about in the previous class. All right. So you have to identify your levels, and I've shown you guys how to identify your levels. I gave you the criteria for identifying key levels. I gave you the criteria for identifying key levels. Yeah. Yeah. Let's go. So I give you guys the criteria for identifying key levels, and it's all in previous slides. It's recorded already, it's saved on YouTube. So if you don't know, you're joining us for the first time, no problem. We got you covered. You can go and watch it and then come back and revisit this one. And then the next one, you define your rules. Now, let me explain what I mean by this. Defining your rules. Defining your rules. What I mean is, now, like I talked about a rule earlier, that when I said I don't trade the Asian session, no matter how juicy the setup looks like, because that is part of my rule. All right. I don't do anything outside my sessions. That is part of my rule. So now you define your rules, right? As a trader, you should have rules that you live by or you trade by. Now, you should define your rules. And now, creating your rules, we'll go more in depth in another class. But you should know your rules, what kind of risks you want to take, what kind of risks you don't want to take, how much you want to lose, and how much you don't want to lose. That's what I mean by what kind of risks you want to take. For those of you who might not understand, and what you want to see before you take a trade, do you understand? Those are your rules. Now you want to see. I thought you guys a double pattern, right? Now you might be like, I want to see a double pattern on this support zone before I buy. That is a rule. You understand? So those are define your rules, what you want to see the market do before you trade. Because trading is, if the market does A, does B, and does C, I want to be doing D. If it does X, does W, does Y, I want to be doing Z. You understand? So that's just how trading is. Easy peasy. If it does one, it does two, it does three, I want to be doing four. Like that. Easy peasy. You understand? But you guys are not gonna complicate things for yourself and come out and start saying, oh, forex scam, this one, this is that, that is that, start bashing everybody like as if it's me that carried you how to press buy and sell on your phone. So the next thing, and which is also very important, is checking the fundamentals, right? Checking the fundamentals. Now, what are fundamentals? Fundamentals are news that affects, that drives the forex market, like global news, like interest rates and geopolitical news like wars, all this kind of stuff. Like now, we had very crazy week this week because like market has been crazy since the inception of Iran and US war, right? Because of Trump, the president of the United States. You can just come and just drop a tweet, and before you know, the market is doing a whole crazy stuff. So that's just how it is. You have to check the fundamentals to actually know where the market's direct, because fundamentals is actually what drives the market, right? So with the help of fundamentals and your technical analysis, you're good to go. Then you actually know where the market is going. So that is checking the fundamentals. And how do you check the fundamentals? Now check the fundamentals with my forex factory. Let me show you guys. Let me show you guys what it looks like. It's you can also it's I think you can also get it on the web. Let me show you guys what it looks like. Let me see. Okay, yeah. So this is what it looks like, right? Hope you guys can see it. This is what my forex factory look like. Forex factory. So now you can see everything. Now right here you can see US Iran peace hopes fade as Trump scrapped up. All these things that is happening globally, and now this is where you should concern yourself with calendar, right? Now this is telling us that On Monday, 27th of April, there'll be no news. So this is a very, very decent day to trade. And on Tuesday, we're going to have news on JPY, which is affecting JPY pairs. And then on Wednesday, JPY bank holiday. And then by 7 p.m., we have USD news coming in USD Thursday, like that, like that, like that. So you have to know these things firstly before you trade, right? You have to know all those things firstly before you trade. So you can go and check my Forex Factory or my FX book to get to see all those news. And then the last one is define your risk, right? Define your risk. Now, what do I mean by and this is the part many people joke with. Now, I can you can see somebody with a $10 account and the person wants to go and trade gold with that $10 account. Why? Because the person has not defined this risk. And then once the trade goes against the person, that person will come and start bashing everybody and be like, forex scam, this is that, and start insulting everybody online. You understand? Now you have to define your risk before entering a trade. You should know what you're comfortable risking. That if this trade goes against me, I'm gonna be fine. All right, nothing's gonna happen to me. The world is not going to end. I'm going to be fine. Now, a lot of people, what I've seen a lot of people do on my Telegram communities, whenever I drop a trade, now I see them using very very massive lot size on a tiny account, and I keep wondering, so what happened? And then I asked them a simple question. So if this trade goes against you and you lose this much, would you blame me? But obviously, I'll blame me that I gave them wrong trade. And they forget that trading is filled with variance, right? You don't control the market. Someone's trading decision can come and disrupt your own, trading decision, trading plan, and take a loss, right? But then they will not risk much because why? They are greedy. They want to make more money, so they'll risk more, forgetting that if the trade should go against them, they won't be able to bear it. So you have to be able to define the risk. So now let's head to the charts. Let me show you guys. Let me show you guys how to apply the strategy. I know that's what you guys have been waiting for. I know that's what you guys have been waiting for. This video on your strategy, your strategy, your strategy. It's not about strategy. Let me tell you guys something. Okay, let me tell you guys something. You guys should take note of this. Strategy is just 10% of trading. That is strategy. Strategy is 10%. That's what you guys don't understand. Now, strategy is just 10%. Risk management is 20%. And patience is 70%. So it's not about strategy. It's how disciplined you're able to wait patiently and how you're able to manage your risk. That is what makes up the trading. Strategy is nothing. Do you understand? Strategy is just 10% of trading. So now, let me take us to the chart so that we can be able to see. Okay, if you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. You can see my screen. Okay. Okay, yeah. Yeah, we are live, we're live. If you can see my screen, drop number 2 in the chat box. Okay. Yeah. Okay, I guess you guys can see my screen. I guess my screen is showing. Yep. Okay, so now let me take us to clean charts. This is a trade I called on Friday, right? The Telegram channel. Okay, let me explain what I saw or how I did this analysis, right? And you can see price pushed up from here and go here before reversing. So now, this is a trade I called on Friday. Now, let me delete all this stuff so that you guys can get to experience the analysis firsthand. Delete, delete, delete. Sorry, let me take my time to delete all the stops so you guys can delete. Yep. Hey. So now on Friday, what did I see? Okay, first though, now here's how I do my analysis, right? Now, let's say this was Friday, right? Now, what do I do when I open the first chart? First thing, I want to be early, right? When I talk about session and timing, I want to be early to catch those moves. So I get up by 6:30 and I come on the 4 hours, right? Now, the next thing, what am I doing is I'm marking my levels. Now, this is a level, markets. Now, why is this a level? Because price got up here, dropped, got up here, dropped, came back, dropped. Now it's dropping. That is one. Right. So now, what is our trend currently? If I figure out our trend, what trend are we on? Look at gold being on a solid uptrend. Now, price slightly, it's just, I think this is just a retracement, not fully downtrend. But all I was looking to was to buy, since on the 1 hour, our current trend was an uptrend, right? So this is the 1 hour time frame. I came on the 1 hour time frame. What was my trend? It's an uptrend. Go here, pushed up like this, like it was just going up. So now what do? I turn on my session break. Now, what is session break? Session break just divides each trading day. I'm going to show you guys how to turn it on. It comes to settings. I made a video on how to use trading view for mobile on my Telegram community for you guys, and I pinned it there. So if you don't have a PC, you can go and watch it. And I also showed how to turn on your session break. And then when you come to setting, I think the first thing is going to show you symbols. I want you to scroll down to events, and you're going to see session breaks right here. Click it, turn it on, click OK. That is one way to do it. And the easier way to do it is just hold the dates right here. Right click, and you're going to see session break. Right click the date at this bottom right here. You see session breaks, and you turn it on. So that's another way to do it. So that was what I was looking for. So now price came back here, came here and dropped. Now there's another key level right here. If you look at it very well, price rejected from here, rejected from here, rejected from here. So this is another key level. Can you see? Now, because price got here, hesitated, dropped, give us a W pattern. Now, what I want you guys to understand about key level is that it shouldn't be perfect all the time, right? Because key level is treated not just as a box, it's treated as a general area, right? So that's why you can see this W pattern I told you guys about. Came here, did the W pattern, fooled people that it was going to sell, wasn't the sell, gave us a W pattern, pushed up aggressively, came back here, rejected, pushed up. Now, same thing happened here. I saw this key level, I marked it out, and then I came on 15 minutes. On the 15 minutes, what did I do? Now, this is where it gets, a bit. Now, this way the strategy gets a bit, complicated, but not too complicated, more advanced rather. Now, I'm looking at the previous day's high and the previous day's low. Now, this is the highest point. Now, okay, now look at the session break. You guys can see. Session break has demarcated each trading day. Now, this was on Thursday. You can see it at the bottom right here, Thursday, and this was Friday. This was Wednesday. You can see it's just demarcating it. So wherever the lines begin, that's a new trading day. And you can see the time by 23:15 p.m. That's 11:15 p.m. Nigerian time. So yeah, I was looking for the previous day's high. This was the highest point, right? Now I'm looking for the relevant high of the previous day. Now I picked this one out because this high right here, this lower high, took out this lower low right here, pushed up, came down to take out this low. So this is the relevant high, this one right here. And where was the lowest point? This was the lowest low. Mark it out. Now, what am I looking for? I'm looking for price to sweep these lows so I get to make my trading decisions, right? That's how I get to do my analysis. I wait for price to sweep each of those lows. So whatever low gets taken out, then I get to do my analysis. Now let me explain. So what did I see here? 5%. Mind you, I got up by 6:30 and I saw price took out this low. Okay, let's see. Okay, this 6:30. So price took out this low, dropped back, came back here to reclaim it, giving us the W pattern I always tell you guys about. And whenever I see W pattern on the support and resistance zone or a previous day's low, the price is planning to shoot up or go up. So you're going to be buying. So that was what I saw, and I told everyone to buy on the Telegram channel. Right here, I'm put our stop loss just right below the first leg of the W. Right below the first leg of the W. You can see it looks like a W. Let me mark it out. First leg, second leg. Now let me bring it up so that you guys can see it. That actually looks like a W. You can see right here. It looks like a W, but not a perfect W. It's not perfect. Sometimes one leg will be longer than the other. Sometimes one leg will be shorter. It might be like this. Showed you guys in the previous video how W pattern forms. Now this is what I marked on my level, and I was looking at this high right here for price to take it out. And price pushed up. That was it. But I didn't stay on this trade long because I told them we won't be holding the trade for long. We'll be closing out pretty soon. So that was what I saw, right? That was what I saw. Now, you guys can see. First off, I said the early. And when did I get in on this trade? By 8:15, right? That's what I saw. That's when the setup formed completely. Made my rules. I was like, I'll wait for price to take any of these lows, any of these highs or low before I get in. Now, what is this now? Now, what did price do by taking this low? Now, every day, price sweeps liquidity first. Now, what is liquidity? We'll go more in depth on a later class. But liquidity is just fuel. And put it like that so that you guys get to understand. Liquidity is fuel that drives the market because you can't move a car without sweeping liquidity. That's what liquidity is. Now, what the banks want to do is that the banks want to get into their own position. The banks want to get into their own positions and they need liquidity. And what is liquidity? Fuel. Because the banks, they trade very big, massive side. Like we're talking about billions and billions of dollars, not 100K, not even $1 million, not even $10 million. We're talking about billions, like 10 billion, 100 billion, up onto trillions of dollars. So they need liquidity, which is that for. And what is that for? You and I, our stop losses. Yeah. So back then, when I started trading, what these people online, what they're telling us was, we are trading against the banks and stuff. No, all the explanations of how the banks move gave me this mental picture of banks are actually wicked, and this and that are evil and stuff like that. But the banks, they don't really care about you and I. They don't really care. All they are out to do is to make money. And they see the banks always take our stop losses. The banks, they don't take your stop losses. It's not like the banks they sit every day or when they wake up in the morning and they want to trade, they be like, okay, today let's take retailer stop losses. No. What actually happens is since they are trading big size, right? Now they need, okay, let's say for example, they want to buy gold with like over 150 billion, right? And what do they need? They need orders to match that year buy orders. Now, the rule of trading, for them to be a buyer, there must be a seller, right? So now, since the amount of sellers are not there to match that order, that amount of buy orders the banks they have, what does the market do? The market starts dropping to find orders that will actually fill up that their orders. Now, let me explain. For example, get this. Let's say this is let's say you buy this for 10,000 naira, right? Now you buy for 10,000 naira, and put your stop loss at 9,000 naira. Now, what is your stop loss? Since you're buying, your stop loss is a sell order, right? Now, your stop loss is a sell order. Now, what you're telling your broker is, if price gets to 9K, right, sell this thing for me because I feel the price will drop more than this. I don't want to lose more money, right? Okay, let me explain with something very, very, very common. Okay, let's say we buy a land. Let's say we buy a land, right? And buy the land for like 1 million naira. And be like, I want this land to get to like 5 million or 2.5 million before I sell it out. You understand? Hypothetically speaking. Now, the land now, instead of the land to go up in value, or you not tell yourself, okay, now, risk management. Okay, you tell yourself, as much as I'm looking for this land to get to 2.5 million naira or 5 million naira, if it drops more than 1 million, gets to 900K, 800K, I'm going to sell. You understand? So now that your stop loss, so now you say you're going to sell at 900K. Now let's take it back to trading. That is your stop loss. That I'm going to sell at 900K. That is your stop loss when you're buying. You understand? Now, if you buy gold, let's say gold's about 4,000 something, you buy at 4,150, you now put your stop loss at 4,145. If you say if gold drops more than 4,145, you're telling your broker, sell it out for me. I don't want to take more loss than that. So that is it. So now, what the banks they are looking for? They are just looking for orders to match their buy orders. Now, let me show you guys. Let me take you guys to the chart so that you guys see what actually happened here. So first off, the new trading day opened, right? It opened. What were the banks looking for? They're looking to buy. Now, price pushed up here. They're looking to buy from here. They started filling in their positions, right? Here, there was not enough sellers to match their buy orders. It started dropping, price started dropping. It's just market algorithm. Started searching for retailer stop losses because retailers they set stop loss at a particular point. So they started searching for stop losses, search, came here, and there was enough liquidity, enough fuel for them to get in. And the moment he got here, he swept this low, started pushing up, came back again, it got in, and just like that, before the actual move happened. And now, why the price dropped the moment it got here? I was thinking to take out this high, this one right here, but I couldn't take out this high. Why? Because there was enough sell orders to push price down backwards. Yeah, so that was it. So that's what happens on a daily basis. Price always sweep out this high. So if you can mark out this high and below and wait for one to be taken out first before you get in, that's a high probable trade. So all I do is I just wake up in the morning and I mark the high and below and I wait for one to be taken out. So if below is taken out and the claims inside, then I want to be trading inside to the next high. But if market has done this, let me show you guys something. But even the market did this, dropped, came back here, dropped again, I would have been looking to sell, right? Because I'm looking to trade. If market breaks up above, breaks below the previous day low, I'm looking to sell. But if it breaks below it and comes back inside, I'm looking to buy to the next liquidity. So that is just how it is. So that was what happened, right? That was what happened. Price came out here, took the low, came back inside, double pattern, give us our double pattern I always tell you guys about. Because this pattern always prints every now and then. Always prints on the charts, always prints. If you're very watchful, you will see it. And you have to be early too. Not when you wake up by 10 or 11, price already at this point, you know, to start trading. You have to wake up early to be able to spot this move. Let me take us to another trade. If you're following me up until now, if what I've been saying makes sense to you, I want you guys to drop number 3 in the chat box. Drop number 3 in the chat box. Drop number 3 in the chat box. If what you've been saying makes sense. If what I've been saying makes sense to you, drop number 3 in the chat box. drop number 3 in the chat box. What I've been saying so far makes sense to you. Before I move on, let me know that you guys are actually following up, so I don't feed you guys with information. What I've been saying so far makes sense to you. Drop number 2 in the chat box. Drop number 3. What I've been saying so far makes sense to you. Drop number 3 in the chat box. Drop number 3 before we move on. Okay, 3. Okay. Okay. I think it's making sense to some people. Yeah. Okay. So now let me take you guys to another pair. Let's say GBP/USD. Yeah. I think the same thing. Actually, so the same thing. Yeah. So on GBP/USD, first off, what did I do? I marked down my level. I went to the 4 hour as usual. I went to mark out my level. Price got here, dropped. Got here, pushed up, right? Let me turn up the session break so that you guys can see it properly. So price got here, pushed up. Now, what did I do? I marked out this level. Now, what have I told you guys? Like the previous resistance can flip and become support. Whenever a resistance is broken, it's going to flip and it's going to become support the next time. Now, it happened here. This was a resistance, dropped, came here, dropped, came here, dropped again, eventually broke it, came back here, it became support, came here. Now price is rejecting off of this point, rejecting, and now has pushed up. So that's what happens, and I've explained this in the previous class. So I marked my level, and I came to the 1 hour time frame, turned on my session break, so I can know the previous high and the previous lows of the previous trading day. So this was the high, this was the highest point price got to, and this was the lowest point price got to. Now I go down to the 15 minutes to pick my entry. Now I saw this move, I didn't really take it because what was I waiting for? Like I said, as a trader, you have to follow your rules. I was waiting for price to take this out and come back inside, reclaim this high, this zone. So I'm going to be going in for the buys, right? But price into that, so I didn't actually take the trade. But eventually, price pushed up like I was anticipating, but it didn't give me perfect entry to go in. You can see price stops right here. I think this was enough liquidity for price to push out. I was waiting for price to take out this low, take it out, push down, take it out, come back, reclaim it, and so I can buy from this point right here. And I'll put my stop loss somewhere around here. And then target 1 is the 2. Sorry, target 1 is the 2. Now, what do I mean by 1 is the 2? That's my risk reward ratio. So if I'm risking $10, my stop loss, I'm looking to make $20 as take profit. Easy peasy. So people can do 1 is to 3. This thing, risk reward ratio 3. That's if you're risking $10, you're looking to make 30. Some greedy people can do 1 is to 5 or 1 is to 50. I don't know, depending on your trading strategy and your trading style. But me, I always stick to 1 is to 2, right? So it's easy, right? For my TP to be hit, I don't get to spend too much time on the trade. So that is it. But I didn't take this trade because price didn't actually meets my entry criteria. Oh, fuck. Okay, I think you guys are hearing me. Oh, I think they just took lights right here. But no problem. As far as you guys can hear me and you can see my screen, that's what matters, right? I think the lights will be coming up pretty soon. Yeah. And okay, so on GBP/JPY, about same thing, right? Marks my levels. You can see price rejected from here, pushed up, came here, rejected. What did I do? I look for the previous low. This is the previous low, right? This is the lowest point price got to before the new trading day. And what the price do? Price pushed up a bit, came down, gave us a W pattern, but it didn't actually take the low very well. Give that W pattern. So I didn't take it because it didn't sweep the low perfectly, just reacted above it. And already I had gold trade running already, so I didn't actually bother taking GBP So I would have bought again from this point right here. Put my stop loss right below W pattern. Target 1 is the 2. You can see 1 is the 2, and price would have smashed the profits. Okay, simple. Same thing on USD So, same thing, same concept applies to any pair you're trading. Now, mark at the previous day's high, right? Mark at the previous day's low, and I went to the 4 hours to mark out my zones, right? Supply zones, my resistance zones, just like that. Come down to the 1 hour to mark my previous day's high and low. All right. So that was it. Now, what was I waiting for? I was waiting for price to just take out this low right here like this. Take it out, give me an M pattern. This is the reverse of the W pattern. Now the W pattern is for buys, the M pattern is for sell. But I didn't do that. He didn't do that. He just rejected, dropped. So came to take this other liquidity right here. I was waiting for price to sweep this and then come back, close back inside, so I'll be selling. And if that would have happened, I would have sold USDJPY, my stop loss somewhere around here, and targets this low already. You can see price would have done fine. Same thing on BTC USD. Sorry. Okay, BTC USD. I saw this setup yesterday, but I don't trade during the weekend. You can see price took out this low, gave us the W pattern. I don't trade during the weekends, gave us the W pattern, came back here to reclaim this zone. And you can see how price did from here, it pushed up to this point. But I don't really trade during the weekends. I don't also trade during Asian session. So this was ninth time, around 7. Don't trade in the time. And silver, this is silver. Don't go and trade silver if you don't have capital, because my team gold is aggressive until you meet its junior brother silver. Silver is very, very volatile than gold. Silver, the same thing happened with silver. Now, silver, now you can see a low right here. Why didn't I pick it? Why didn't I mark this low out as the previous day low? Because it didn't take out this one. So this low still remain. That means what is actually saying that price go here, but buyer steps in to push price upwards. So I was waiting for price to come back and sweep this low. So upon price come back to sweep this low, give me the W pattern. You can see it's not that clear, but once you train your eye to spot these patterns, you always see it. You always see it. Once you train your eye to spot this pattern, you always see it. You can see it. This is when I saw the pattern, and you can see how price did. Easy peasy, just like that. So that is how to apply the strategy. Easy peasy. Easy peasy. You see, if you have any pair recommendation you want me to, see if we can apply the strategy to, if you have any pair you want me to apply the strategy for you on, just let me know. Just let me know. If you have any questions, it's time for questions. Ask me any question that you have. If there's any way you're not, you're not satisfied with my explanation or you're confused, just ask any question. Ask any question. If you have any pair you want me to test the strategy on, right? Just let me know. Let me know. If you have any pair, okay, I think someone said Euro JPY. Euro GPY. Okay, Euro GPY, Euro GPY. All right, Euro GPY. Euro GPY. Okay, so now I don't trade Euro GPY. Let me just do my analysis in front of you guys. And yeah, Euro GPY has been on a solid uptrend. Let me turn off this session so it doesn't confuse you guys. It has been on a solid uptrend. It broke this level right here. Now, when I tell you guys that whenever a support is broken, whenever a resistance is broken, turns into support. You see, applies on all pairs, any market pair. Oh, you can see broke it now, it's rejecting, and price will be shooting up pretty soon. So that's how it is. Now, UGPY. So on the 4 hour, okay, on the 4 hour, we're on an uptrend, right? 1 hour, what's our current trend? What's currently happening, or what was currently happening? Uptrend. Forget all this price is doing. It's still in an uptrend. So here I turn on my session break. Here's where I turn on my session break. It's not coming up. Yeah. Okay. Turn on my session break and I mark my highs and lows. This was previously high. And this was the low. Hope you guys can see it. And this was the low, right? So I go on the 15-minute time frame. And you can see price just picked it out. Very tiny. And what time was this? Picked it out very tiny. And if you look at it very well, you see it's a double pattern from right here. If you look at it properly, you're gonna see it's double pattern. First leg, second leg forming. The moment you train your eyes, the more you spot it, the easier it becomes. It doesn't have to be perfect for you to see. It doesn't have to be perfect. It doesn't have to be a perfect W. It doesn't have to be a perfect W. You just see it. Because trading is pattern recognition, and the market is very dynamic. So it doesn't form exactly the way you saw it yesterday. Because every day we have different numbers of traders in the market. So in order for you to see the exact same pattern you saw yesterday, or in order for the market to move the exact same way it moved yesterday, you have to have the same number of participants that was in the market yesterday to be in the market today, and you have to have them thinking the same way they thought yesterday, thinking the same way they thought today, and you have to have them, trading the same exact amount or the same exact size, and at the exact same time they were trading yesterday, they were trading same day. So which is not possible, right? So that's why the market is very, very dynamic. So now, what would I have done here in this scenario? I would have gone long on Euro JPY, right? I have bought Euro JPY, but I think price didn't trend the whole of Friday. I don't know why. Maybe a macro factor, which is a fundamental factor, I would have targeted here 1:2. Risk reward shows 2 right here like this. And I would have exited the moment the market started doing the shit thing right here, because this is just hesitation and price was just hesitating. It didn't really move again. So that is it. That is it. So if you have any other pair recommendation, you want me to test the strategy, do I trade exotic pairs like cat nature? No, I don't trade. I don't trade exotic pairs like that. I don't trade those pairs. I only trade 5 pairs, right? There are only 5 pairs on my watch list, which is okay, let me show you guys. Let me show you guys the pairs on my watch list so you get to see it. You can see my watch list right here, right? You can see my watch list. XAU USD, GBP USD. Let me show you guys. Let me extend this. XAU USD, which is gold, GBP USD, GBP JPY, USD JPY, and BTC. So these are the only pairs I look out and I get the trade. If I don't see any opportunities on these pairs, I don't do anything. So yesterday, I think on Friday, I was experimenting with silver, and I was like, let me just see if my strategy works on silver, and it worked out pretty fine. But I didn't take this trade because silver is very very volatile, right? Uh, Me taking this trade would have been me risking $80 with 0.01 on this trade. Stop loss would have been $80, and taking the trade would have paid off very well. But part of my rules, don't just take trades, no matter how juicy the trade is. If you can't, deal with the loss, you just walk away. Now, normally this gold trade I took right here, this gold trade I took, what was my stop loss? My stop loss was about $20, I think so. This one right here. Okay, I think $26. Now let's take it back to silver so you guys can see it. Okay, can you see it should have been over $82 with 0.01. And now imagine you're using 0.1 or you're using one standard. You don't understand. So silver is very, very aggressive more than gold itself. So yeah, those are the pairs I look out for. So those are the pairs I look out for. I don't trade card Swiss franc. I don't trade it. I don't trade it because it's not part of the pairs I look out for. So if you trade card CHF, no, you should take the strategy and go and apply it on card CHF. You understand? It works because market moves based on liquidity. So, but before you take actual trades, you should be able to backtest, take this exact same strategy, go and backtest on previous charts so that you get to understand how price. Now, let me show you guys how to backtest. Now, there's a feature on TradingView that allows you to rewind the charts, but I think it's on premium, and I'm not yet subscribed to premium because to me, I don't actually really need it. Yeah. So there's a way I actually backtest. Now, okay, this was Friday 17th. Okay, let's say this was Thursday, right? On 16th of April. Now, what do I do? Let's say this. Okay, let's say this Friday hasn't happened. Let's say this is where we were. What do I do? I'll just mark out my level, right? I'll mark out my level. Level. You can see this previous resistance turned support right here. Push up, came back, push up. So now I've marked out my level. What do I do next? I mark out the previous day's high. So these are a backtest. Mark out the previous day's high. Mark out the low. This was the lowest point. And now you can see what price did. Push down, took it, grab liquidity, close back inside the range. So whenever price takes out this liquidity, what I'm likely going to look out for is I wait. But if I wake up in the morning and I see that liquidity hasn't been taken, I wait for price to take out one direction. So the price does this. Now what I look out for, if price takes out the previous day's high, breaks above it, then I'm going to be looking to trade above that high. But if it takes the previous day's high and close inside of it, I'm going to be looking to trade inside that range. Right now, this is the range. From here to here is the range, right? So now, if price breaks below this, and even price broke below this, rejected, drops, gave me like an M pattern. Now this calls for a good shot because one, this is a zone, point of hesitation zone where price has hesitated. Now what am I going to be doing? If that had actually happened, I would have been looking to sell. Right? Where's my focus to sell? Yeah, I'm looking to sell stop loss somewhere around here. Like this, and target 1 is to 2. So this stop shows 2. Like that, easy peasy. But no, market didn't do that. What did it do? Easy peasy. What did it do? Instead, it grabbed liquidity, closed the inside, retraced. Now, if you look at it, this is a W pattern. Can you see? It's a double pattern. Me seeing this, what would have done? I would have learned. Guy, stop loss somewhere here. Yeah. Yep. Stop loss somewhere around here. And target one is the 2. You can see it would have hit big profits. Like that. So these are your backtest. So before you take out the strategy, make sure you backtest so you're able to understand it. And then we'll move to the next trading day, which was on Monday, right? Okay, yeah, Monday, 20th April. Mark previous day low. This was the previous day low. Why? Because this high right here, let me delete this stuff. Because this high right here was taken out, pushed up, created this low. Now, what the market did? Opened, swept it. This was around 2 p.m., 2 a.m. So I was fast asleep. And only waking up by 6:30 to do my analysis. Price push up, came back here, drops, and I'm waiting for the W pattern to form. And the W pattern didn't form by 8, it didn't form at all, it didn't form properly. Now, came and formed by 12. This was New York session. Like what I said, if London session doesn't give me an entry, I wait until New York for the market to be mature for me to take a trade. So you can see this was by 12 W pattern formed, right? Formed, yeah, formed right here. So what would have happened? I would have gotten it long or good. I would have bought, but the market didn't really push up, and I would have exited because market was kind of slow. I don't like slow markets. I would have exited, targeted 1 to 2. Yeah, like this. I would have exited because market is slow. In following trading day, what happened? This was the previous low. Now, why is this the previous low? Because it wasn't taken out previously, and this was the high. Now, what the market did? Rejected, rejected, rejected. Don't forget, don't forget your zone, right? Please, let me delete it. Then mark out the clear zone from here. I don't like my zones too big. Like this is just fine for me. I get to interpret it properly because I understand that key levels are not just a gray box like this, a rectangle like this. It's a general area. That's why some parts are not even touching, like here, the price pushed up, and some parts are overlapping. Like this point, it's not touching it, but I know that, yeah, it's part of my key level, right? So now what happened here? Price go here, gave me this W pattern, swept it slow, gave me W pattern by I think almost New York session. And I would have gone long here and it should have hit stop loss. It's unavoidable. I would have taken a stop loss right here. I would have targeted 1 to 2. Put my stop loss somewhere around here, below here. And I would have hit stop loss. So that is just how it is. No strategy is an holy grail. What do I mean by holy grail? No strategy is 100% accurate that you must always be winning with every strategy. Now, when you take a good strategy and combine it with a good risk management and solid trade psychology, then you don't have to win every trade to be positive, to be profitable. You don't have to win every trade to be profitable. So that was it. And price had other plans. So that's just how it is. That's how market moves, right? That's how market moves. So, any other questions? I think come to the end of this class. Yeah, I think it's already time 7:30 on the dot. It's already an hour. So, do you guys have any other questions? Do you guys have any other questions? Anyways, if what I've said so far made sense to you, drop number 4 in the chat box. If what I've been saying so far made sense to you, and drop number 4 in the chat box. Drop number 4 in the chat box. Drop number 4 in the chat box. Drop number 4. 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 What I've said so far. Drop number 4 in the chat box. Drop number 4 in the chat box. Okay. Okay, I think. Okay, someone said no questions. Okay. 4. Okay. It depends. I love you too. I love you too. I love you too. Yeah. So drop number 4 in the chat box. What I've said so far made sense to you. Since you guys don't have any questions, but if you have a pair that you've been looking at and you want me to like see if you can also apply this strategy to that particular pair you've been trading, or you just enjoy trading, just let me know before we call it a day. All right, before we call it a day, if you have a particular pair, if you have any trading related questions from the previous class that we've covered, maybe you went back to watch it and maybe you didn't grab something or you were confused, just let me know. Just let me know. Just let me know. Just let me know. Okay, for Euro GPY, I've done Euro GPY before. I've done Euro GPY before. Okay, I don't think there's any questions. So since you guys don't have any question, I think it's safe to call it a day, right? It's safe to call it a day. Right. So I'm gonna see you guys next week Sunday, same time, same place, and always remember every day is a new day to become a better you. So make sure you keep improving on yourself as a trader, and I'm gonna see you guys next week Sunday. Yeah, I'm gonna see you guys next week Sunday. Bye for now. Bye.